Yo people, so we're looking at how market makers use news to trap retail traders and what they do beforehand to make sure they've already trapped them. So, we're going to be looking at this bit and we'll be looking at another one as well, so you can just get the idea again and again so you understand it. So, what's happened here? We're going to look at it from a retail's point of view. The market has been dropping. It's been making lower highs of some fucking bullshit that retail traders use. Yeah, lower highs. And it's a downtrend in any retail store. It's been lower highs, the RSI is just mid. It's at a low point there, then it's at a high point here. Then it's at a high point again here. So we don't use the RSI in this system, people. I'm using it to prove a point because all the other oscillators and shit just work off it. So what happened? It's been in general, it's been showing you to go short. Here you get an M, and they do fast pushes down at the start of Europe to trap retail traders down. Look, fast push, 30 pip moving like 40 minutes. That's fast. Okay, they've done a fast push down, then they keep it stable, keeping the people trapped down here. And then a piece of news came out, and then they use it to complete their cycle, so they push it up. And I took this trade here. You can go back to one of my old videos, it shows you that we took it. And it's because the retail traders are showing a bunch of bullshit. We're going to get onto RSI and stuff. Retail traders showed a bunch of bullshit to make them believe it's going to go short, and then it goes against them. They just keep trapping the liquidity at the bottom. Look at the moves that they do down. They're always fast. The fast move is a false move. Remember that. Fast move down, go back up slowly. Fast move down, go back up slowly. Fast move down, go back up fast. To make sure all them cunts are trapped. The only time it'll move fast in the right direction is when they've got the money trapped. You need to be able to identify when they have the money trapped. And they used a news announcement which were negative. And I'll say this, it was negative for CAD JPY. You go back, I mean not JP, it was negative for the US, for the Canadian dollar. And look at it, it just shot up. So what, the news is bad. It's been showing a downtrend. Let's have a look on the hourly RSI. It was here. You're at the peak of the RSI. Look at it, just a peak at the top. So what do retail traders want to do? They want to go short. Everything is pointing to a downtrend, yet it goes up. And the news was a negative, but it goes up. Why? Because they want to complete their cycle, which they already thought about here. Then we'll go to another example. A similar thing, you'll realise the same shit happens over and over again because they have a system to trap people. Now we took this trade as well, you can go to a previous video, that'll be shown. Down here, so what were they doing? It was slowly moving up, and in the intraday terms of things, it went down, and then the large scale time frame on the daily, it was going down at this point. So what happened? They kept spiking it down. They trapped all the money here. Look at it. Spike down, trap the money here. Spike down, trap the money here. Spike down, trap the money here. Look at it, they're just spiking it down and trapping the money. Look, they spike it down, they do a fast rise to make sure the people down here are trapped. Trapped volume, trapped volume, trapped volume, trapped volume, trapped volume, trapped volume. And again, the news for CAD JP from the Canadian dollar was negative, but it went up still. Why? Because they had a cycle to complete. Now, if you don't get the levels or the cycles, the cycle is 1, 2, 3 level. Go to my other video. It's near the top of my channel, you'll find it. It's called Levels in Forex, and there's loads of remarking the pairs videos you can go over. So they spike it down, trap the retail traders. Then the news comes out here. They do a fast swipe low, then high. Fast move, false move. Fast move, false move. Fast move, false move. Fast move, false move. And the only time they'll do it fast is when they've got all the liquidity trapped at what they want. Then they'll just do a fast move up. And that's quite a controlled move up if you ask me. Look, it's just a zigzag up. But look at that. Fast move down. 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 Then when they want to rise it, they do a big push first and then they do a slow zigzag. Right? So they had a cycle to fulfill, they had levels to fulfill, they had orders to fulfill, and they had the money trapped, i.e. the retail traders trapped at the bottom short when it was going long. And that's how market makers use news to conceal their cycles and to complete levels, really, and to trap retail traders. That's all it is, it's just trapping retail traders and moving the opposite way. They might show retail traders a bit of profit, but in the long run, they'll just say you went short here. I mean, a good trade, no you're not. You get stopped out at break even, you get emotional, you want to get short again because it's gone back down to where you got out. And then it goes up. Now notice in the news they always do it fast. It's to get retail traders emotional. Now I'll guarantee you if we went on the RSI, on the hourly, look at it, it's on the top level of the RSI, they're just showing retail traders, all the oscillators, all the bullshit, all the noise. Never trust this shit. They want you to look at this shit, they know you're looking at this shit, and by shit I mean RSI, MACD, what fuck, you get my point, fucking drawing Elliott waves, all that bullshit. Fibonacci, don't get me started on that one pisses me off the most, but yeah, that's how they use news to trap retail traders, and it's all to fulfill their cycles and their orders. So leave a like, join the Discord and subscribe, thank you.